Did you know that Pablo Picasso needn't ever pay for meals when eating out in restaurants? Now, I didn't know this, but instead of parting with his cash, he could simply draw a little doodle on the back of his check, knowing that the artwork was worth more than the bill. Well, my guest today, Ryan Dintz, shares this pretty amusing tale in today's Fat Tale Daily. But he does so to illuminate something far more serious, and that's what happens when people have the power to create money at will. Now, the timing of this piece is pretty interesting too. It comes just as we're seeing what Ryan calls a run on gold in London, with rumours swirling that there might not be enough physical gold to meet demand. Now, all this while revelations about massive fraud in US aid are coming to light as well. So, Ryan, welcome, mate. Happy Monday.
Hey, happy Monday. How you going?
Good, mate. Let's start with something that really caught my eye in your piece today, and that's this apparent liquidity crisis or speculation of a liquidity crunch or problem in the London gold markets. What makes this situation different from previous tensions in the gold sector?
Look, I'm not that familiar with the previous tensions, but I do know that gold has historically traded based on the paper contracts more than the physical gold. So the paper, people, instead of like delivering gold, which is cumbersome and heavy and hard to do, they just trade paper contracts amongst each other, and they get investment exposure to it. And for many decades, I know Greg Canavan, our colleague, sort of has talked about this decades ago. People have claimed that the physical price of gold has been suppressed by so many paper claims on it. You can buy and sell gold without the gold ever leaving the vault. And that was sort of one of the points of gold why people know that I like Bitcoin more than gold, but that's one of the sort of the bad things about gold, in my opinion, was that people didn't really custody it. And most of the time, they trusted professional custodians in vaults in London or New York or with big banks like JP Morgan and things like that. And those professional custodians would also be the ones that are trading paper around and clearing it and doing all the sort of intricacies of the paper system. But what seems to have happened even over the last decade, if you follow our colleague Brian Chu's work, he goes on about this. You've seen countries like China and maybe India to a degree and other BRICS nations building their own physical gold assets. So they've been buying physical gold and they've been taking delivery of this physical gold, so not the paper contracts, and taking it back home. They've been repatriating it. So you can see there's been a steady buildup of gold reserves, especially in these BRICS nations over the past decade. Now, what's happened in recent months, which has sort of turbocharged this, is that the idea I pointed to today was that with Trump potentially putting tariffs on different things, there's been a rush from US companies or US banks to repatriate their own gold from overseas, because if they do it later, they might have to pay a tariff on it for bringing it back from an overseas vault. So you've seen a rush from people like JP Morgan to bring gold back from London vaults into New York vaults, basically. Now, what's happened when that process has been occurring is that the wait times to get these physical gold from these London vaults, where this gold is apparently stored, is blown out massively. Now, that's making people worry that maybe the gold's not there. Now, if we know what an old-fashioned bank run is, an old-fashioned bank run is when everyone tries to get their money out of the bank at the same time and they find out they've not got all the money there. This is potentially what's happening on these London vaults. You're seeing the wait times go pretty far out. You're seeing the paper contracts trading for less than the physical gold now as well.
Right.
So you're seeing that discrepancy.
Is that indicative of what the very situation that you're sort of talking about?
Yeah, exactly. It's an indication. So the two indications seen from financial markets are paper gold is trading for less than physical gold, because people are saying, well, if the paper gold can't get its hands on the real gold, what is it worth? It's worth nothing, So there's a discount there. Physical gold is trading for more expensive. The other thing you're seeing is the borrow cost. So the interest rate on borrowing gold, because a lot of the times what custodians do is borrow other people's gold to satisfy their own claims, because they didn't actually have all the gold. You're seeing the interest rate on borrowed gold go up as well. which is just like an indication of risk. If something's more risky, the interest rate on it goes further up, like a loan or something like that. So the two things you see in financial markets are paper gold trading for less than physical gold, and the interest rate on borrowed gold is turning up sharply. So basically, no one who has physical gold trusts anyone else in the system, and you're getting that counterparty risk, and you're seeing that run starting to take place. Now, at the same time, what you're seeing is the price of gold hitting record highs. Um, so how this plays out, I'm not sure. Do they find a way to paper over the cracks, to use a pun, or is there just going to be basically a run on gold until the vault's empty, and then whoever doesn't have the gold is left holding the bag? I'm not sure how
This
it plays out.
this
Exactly.
paper gold market, though, isn't it? It's relatively well known. What do people expect? I mean, they know that that's the case, right?
Yeah. Again, it's what's the old Warren Buffett saying? You don't know who's swimming naked until the tide goes out. It's similar to this, and you've got to remember, people get complacent with things like that are paper contracts because these markets are so big, and the people involved are J.P. Morgan, Goldman Sachs, big names, and for decades nothing happens. People get complacent with it. It's only when there's a trigger point, when there's a run, that that risk becomes to the fore, basically. Now, like any bank run, when the bank run starts, it's hard to stop because no one wants to be the one that doesn't take the money out of the bank. You know what I mean? If me and there's a bank run on the Commonwealth Bank, I'm
You're
going
going to
to
get there
run to get my
first.
money out before you. Yeah. And so what stops that process? Is there going to be some, I don't know if there'll be some intervention, maybe not, because remember, gold is not a central part of the government's monetary system these days. It used to be, but it's not now. So is there government that steps in to try and paper that over? Probably not. Do some of the big banks get together to try and find a solution? Maybe, but how can they find a solution if people like China want to get their physical gold back? It's not like when there's a run on a bank, you can just create more dollars out of thin air. With gold, you have to get the gold, and there's no other way of getting the gold except the gold. So it's not there's no like paper solution like they do whenever there's a financial crisis. When
Yeah,
there's a financial crisis, what happens?
the print.
There's a panic. The central banks come together, the governments come together, they reduce interest rates, they create more dollars out of thin air, they flood the system, and the liquidity solves the problem. So
Or makes it bigger.
because it pushes the can down the
Yeah.
road, but it solves the immediate crisis. Everyone who wants dollars can get it. Then the panic subsides. People stop running to their banks to get their money out because they know that the government's going to backstop it. So that's what happens in the paper system. That's not a good outcome, by the way, but that is the outcome that, from a systemic point of view, that saves it. With gold, you can't do that, can you? If everyone wants their physical gold, there's no backstop. You can't create gold out of nothing. So I don't know where this leads, but it's really interesting. And you can see that as an investor, the price of gold's rocketing. And as an Australian investor, this is good news. We've got a heap of gold miners, heap of gold in the ground, juniors, bigger ones. So I think there's an investment opportunity here for people to jump on, because if this does turn into a panic, then I know that I think Brian Chu might have had a prediction of $10,000 gold. Then that becomes a possibility. And from my perspective, Bitcoin tracks quite closely with gold as well. So that puts the benefits of Bitcoin into light as well.
I've got a question about Bitcoin and gold together in a second, but first, that's got to make those companies that mine gold pretty valuable, right?
Exactly. Yeah. Well, think about it. If it's, any resources company, the value of the company is based on the value of the commodity in the ground, and even an uneconomic deposit. So this is where the junior miner sector might be interesting, because you might have a deposit that's not economic at $3,000 per.
But at
$10,000
or whatever,
but at $10,000, it's a literally a gold mine. So there's a lot of puns here.
Yeah.
But yeah, like that's what's interesting about the junior mining sector. And I do know that from reading Brian Chu's stuff that has been a sector that's lagged currently in the current gold price run. So what I think will be interesting is if this turns into a panic and a frenzy and the gold price keeps reacting, then you're going to see a massive re-rate on these junior miners. Yeah. So that's an interesting investment angle. Again, you don't know what might happen, but if it does play out like that, then that's going to be a big opportunity.
Now, you just mentioned obviously Bitcoin is your preference, even though you acknowledge gold's potential as well. But how do you see these two sound money alternatives playing different roles in what you call today is fiat money in the death throes, or the death throes of fiat money?
Yeah, I don't know how mainstream this news about the US aid stuff coming out of America is. I mean, I follow it on Twitter and
Yeah.
I follow people like Elon Musk, and I'm getting updates every minute on it. But for people that don't know, basically, Elon Musk was appointed by President Trump to head this Department of Government Efficiency, so called DOGE. Um, Now, what he's been doing, he's been using or software engineers to just dig into various departments in America, government departments, and try to find out where the money's going. You got to remember, people, agencies like USAID, like the Federal Reserve, like the Department of Defense, they've not had an audit for like decades, if ever. I don't think the Federal Reserve's ever been audited. So basically, if you or me, we get asked by the taxman to prove what we've done, we have to do it, or we face fines and jails. These departments are basically sinks where money goes in, no one knows how it's
Mm.
spent, and no one can ask any questions. What Trump under Musk has done is he said we want to know where this money's going, and he's targeted this US aid, which is this sort of like pan-national US organization that gives money all around the world. And what apparently is coming to light is that it's basically just a slush fund for politicians, bureaucrats, administrators, charities. One stat I saw estimates that over 93% of payments from this $100 billion basically slush fund, 93% of all payments are fraudulent. So the point about fiat money is that kind of ridiculous system. Look, this news will come out over time and we'll find out more about it. But that kind of system that's been hidden for decades is only possible under a fiat system where you can create money out of nothing.
Yeah.
Like we talked
Yeah.
about before with gold. If you were doing this with gold, it would come to light a lot sooner because eventually the physical gold would not be there. You know what I mean?
Well, you'd see like 300 million tons sailing somewhere.
Correct. Exactly. There's a link to a physical
Yeah.
reality, and that physical reality has a cost to produce it. When you do a gold mine, for example, you have the energy expenditure to find it. It's a scarce asset. You can't just create it at will. So that provides a check and balance to governments, basically, because it means that when they spend money, it's something that they can't just create more of. So you have to think about it. Even if you think about the 20th century, why did Great Britain's empire sort of fall?
Mm.
Well, the two world wars it was in cost real money. Britain lost most of its gold over the course of those two world wars. And you can see, it's not really recovered since then because it went from being a rich nation that had gold.
Well, I think it
to
actually
a nation.
printed its way through World War One, but then it had to reconcile that afterwards, and it stood them out.
Yeah, it's a really interesting period that actually where Britain was trying to work out what to do after they went off the gold standard temporarily in World War One. Then they tried to go back on it, but they couldn't find an appropriate rate. But after World War Two, basically America had most of the gold. That's why America rewrote the rules in their favor. But my point about gold and Bitcoin is it's scarce, limited assets that cost real energy to produce. So there's a real cost. Compared to fiat, that means there's accountability. It means there's a cost to using it, which means you need to, basically think about how it's being used. And it makes fraud a lot harder. It makes this type of fiat system that rewards people who are closer to the money printer, which is essentially what we're seeing coming out of America right now. It makes that a lot harder to do. Not to say there wasn't fraud under gold standard. I'm sure there was. I'm sure there's fraud in Bitcoin and other stuff as well. But it's around the edges. It's not central to the system.
Yeah.
What we're finding with fiat money is the whole system could be fraudulent. Trump, 1 hour ago, just tweeted that he thinks there could be fraud in US treasuries. And his quote was, we might disregard some of them. So what is he saying there? He's basically saying he thinks there's false loans. And remember, US treasuries are multi-trillion dollar market of US government borrowing. Basically, he's saying there's fraud in that. So there's loans that are fraudulent and we will disregard some of them. Is basically saying we might not pay back some of these loans. That's I don't know how much that's going to be reported if people see the implications of that, but that's basically the president of America saying we might not pay back some of our loans because we think they're fraudulent. That is massive. And that, when I talk about fiat being its death throes, who's going to trust a system that is fraudulent to its very core, where the US president might say we won't pay back some of our loans? No one's going to trust that. So I think that is massive for both gold and Bitcoin, because if we move off a fiat standard, it might take over time, but if we gradually do, and if people don't trust the US dollar anymore, there's no other fiat currency you can turn to. You can't trust Europe. Europe's probably got more fraud than the EU's probably got more fraud than America. You can't trust China. It's a communist dictatorship. You can't trust Russia's money. You can't trust any other money. So if you can't trust the US's money, you can't trust any paper money. And as I wrote in today's piece, that's not a new thing. George Washington, 300 years ago, wrote to a Supreme Court judge saying that this paper money is a disaster.
In
It's just
Rhode Island.
to the Rhode Island, experiment there. It just said, it's all fraudulent and dishonest money, and it's having a real cost to honest producers. And that's what we're finding in today's world. We're finding, where do the best students go? They don't go into engineering and other worthwhile stuff. They go into finance to do what? To create more paper money and to play more paper money games. So that's a sort of going off topic a bit. But my point is, I think, and we talked about this last week with the fourth turning vibes. We're at this point in the cycle where the chickens are coming home to roost. All the excesses and the fraudulence and the loose monetary policies of the last 50 years are now coming back to bite. And as we work through this fourth turning process, that's part of the old order that disappears, and the new order will spring up. And what the uncertainty, but also the investment opportunity is what does that new order look like? What is valuable in that new order? And I would say assets that are scarce, like Bitcoin and gold, are better monetary assets for this new order. And I would say, productive companies and knowledge-based companies and AI technology that does stuff that's worthwhile, that's all valuable in this new world order. And that comes at the expense of an old order which rewarded companies and people for being closer to a money printer that might no longer exist in the same form.
And look, I'll just finish off by saying it's not really that surprising. I think we've got a number of fiat currencies in the world at the moment. Every country has their own one. But we also know that in the history of humankind and monetary history, I think it's got a 100% record of failing. Whereas gold, say if you prefer gold or Bitcoin, it doesn't really matter. But gold's been around for 5,000, however long. It's not going anywhere.
Exactly right. And one last thought to think about. What do you think, this is off topic again, but what do you think artificial intelligence agents are going to use as money? Do you think they're going to use dollars or euros? Of course not. They can't even ID themselves and pass KYC checks. They're going to use digital money.
Yeah.
So from my mind, they're going to use Bitcoin, maybe other cryptocurrencies.
Yeah.
They're going to, because they're going to be self-replicating agents that exist in cyberspace. They're going to use the money that exists in cyberspace, which is digital money, which is Bitcoin. And that's a huge topic. And that's not something I wrote about today, but that is something people should start to try and understand the immensity of where AI is going and what money will AI agents use. It's not going to be euros, dollars, or krona or whatever. And it's probably not going to be gold either, because it's a physical commodity. It's going to be digital gold, which is Bitcoin.
That is indeed another topic, Ryan. But in the meantime, I think there is a decent profit opportunity in gold and gold stocks. And Brian, our colleague, is going to be writing about that this week. So do keep your eye open for that this coming week. Thank you, Ryan. And if you'd like to read Ryan's full piece, it's all in the description below, and leave a comment. Tell us what you think. Hope you enjoyed today's discussion. Thank you. Cheers, Ryan.
Cheers. Thanks.